Good morning.
Howdy.
Right, that's what I like to hear. I'm using my playground voice. I want you to too. So I'll say that again. Good morning.
Hi.
Right, we're awake. My name is Gretchen Lopez. I'm the chair of the Seniors Council of Douglas County. And I welcome you here today to our March meeting. Wonderful to have you here. Just a little bit of a heads up, our speaker, Artie, was supposed to be here in person, but he has pneumonia. Felt as if you probably didn't want that germ. So he's going to come to us, yay technology, via WebEx. So you'll get to see him and he's going to present, but that's one of the reasons why he's not here today. So we wish him well, and we're going to hope that he has the strength to power through, right? I want to thank the county for providing the space here today and the technological support so that we can have a virtual meeting for folks, not only like Artie, who has to stay home, but maybe some folks who aren't able to drive, don't have a ride or something. So I want to take a quick survey. I'm a former teacher, so this is parts of it will be interactive. How did you hear about the meeting?
Facebook.
Facebook.
You told me.
Me. I always have a few that say that.
Poster at the library.
Library, great. Go library.
Senior Center.
Which senior center?
And they're only one.
Castle Rock.
No, there isn't. There's a second one in Parker,
I know.
and the board of directors is sitting right behind you. Just saying.
Email.
Well, we're the best.
Email.
But we're the best.
With the biggest.
On the Douglas County mailing list.
DC mailing list. All right. Great. We're trying to expand the different ways we reach out to people that they can hear about us and join in our meetings. So that's very important information. Thank you for that. Please remember to sign your name on the sign-in sheet. We like to know how many people are here. And there's another sign-in sheet to the right of that, and that's for our electronic newsletter called First Friday Update. Our meetings are always first Thursdays, and then the following day, an electronic newsletter goes out to people who sign up for it. And that has announcements about where we're going to be the following month and some interesting information that you might find valuable. So, and that would come to you directly to your email address and the first Friday of every month. So if you would like to sign up for that, there's a separate sign up sheet there. Yes, Wilma?
I signed up for that a long time ago, so I don't sign up for it every time.
No,
Okay.
not every time. Sign up for it once, and as long as you're getting them, then you're good. You don't have to sign up again. One and done, as they say. Like to show you a few things here. Just recently became aware of, it's called the Castle Rock Area Newsletter. This is an electronic newsletter also, not ours, but for the entire area. Has lots of information about businesses, organizations, programs that you might be interested in. I have postcards in the back if you'd like to take a postcard and think about signing up for it. We have an ad in this month's version. It'll be a color. It'll be much prettier when you see it in the newsletter, but it looks like this. And so there's a lot of valuable information in there. So if you would like to take a postcard and consider signing up for that, that would be a good thing to do. Also, we have the flyer for our meeting next month, which Tiffany will be telling you about at her report when she does her report. And that's going to be at the Canvas Credit Union headquarters in Lone Tree. It's kind of across from Park Meadows area, right, Tiffany? Is that where it's located?
Yes.
Yes. All right. They're going to be gracious enough to give us some meeting space. This particular flyer has our meeting schedule for the next 3 months. Yes, Wilma?
Does anybody know about the Douglas County Town Hall meetings? That they call me and it's on the phone. I just wondered, I've been doing that for a long time, but
Did
maybe
anybody hear her about the, okay, so that's the Castle Rock Town Council meeting?
that was in Douglas County
Douglas County
Hall meeting.
Town Hall meeting.
Just a few nights ago. It was about that and the overpass from Castle Pines, not
Mhm.
Castle Pines, Crystal Valley. That's what it was all about.
That's
Always very informed. And I can't tell you how I got involved.
Well, if you get on Douglas County's website, there are different things that you can sign up for, and that would be one. Notification about their meetings. They also have a listing there. We have a webpage there. So you can get our information through them, but they also have a lot of other information that you would find useful. So check out their website. You can sign up to be notified for various meetings. They also have a listing of the schedule of the meetings, and then after the meetings, the minutes of the meetings. So there's lots of things going on at that website that you would find interesting and helpful. Jean, yes?
I was just gonna add, I get those calls too, and it's computerized. Is that what, was yours computerized?
I assume.
Yeah, and they actually leave a message, so like if you don't pick it up.
Yeah.
You can listen to it and get the information.
Super, super. So the next couple of months, Tiffany's gonna handle that. I'm gonna move on to a few brief announcements before, oh my goodness, some questions. Yes, ma'am.
Wondered if you would mind repeating some of the questions or info we can't, I can't hear even with my hearing aids.
Okay, excuse me. Stuff is back there. Don't take my stuff or you're presenting. Yes, I will. I should have remembered that. I've done a lot of public speaking. I should do that. All right. Oh, big announcement. Vintage and Vibrant 2023. You folks who have been there before, you've been waiting for this. Vintage and Vibrant is our signature event. It's a day-long educational event. We've had two, very successful, 2018 and 2019. We were planning for 2020, but guess what happened? Year old COVID rocked our world. So we are now planning our third one for September 28th. Pace Center in Parker. And we'll be having more information on this on our webpage. We'll be sending out flyers and notifications. We're really excited. It's a day-long, as I said, event. We'll have for you a continental breakfast, a lunch, 2 keynote speakers, 7 breakout sessions, and who doesn't love door prizes, right? All that for $10. But if that's a hardship, we do have scholarships. So we don't want to prevent anyone from coming and enjoying the day. It's going to start at 8 o'clock. Registration will be at 8 o'clock. And you'll get this in writing in other ways. You don't have to frantically put this all down. But I do want to tell you about our keynote speakers. Number one, our morning keynote speaker, Jean Knott. She's the 2022 Miss Colorado Senior America. She's in her 70s. She's been an actress, an accomplished singer in a professional singing group, and she does stand-up comedy for older adults. So we're kicking off the day with a few laughs, which is always good. She's marvelous. You'll love her. Oh, and here would be a good time for me to tell you a joke. So the wife says to the husband, I am sick and tired of you pushing me around and talking behind my back. And he says, but honey, you're in a wheelchair.
She's in a wheelchair.
She's much better. And then our afternoon keynote, our luncheon keynote, Dr. Bruns, Carson Bruns from the University of Colorado in Boulder. He is doing some fascinating research about smart tattoos. Did you know a tattoo could be smart?
I thought they were already done.
Yeah, well, they used to be. But he's doing research on how a tattoo can help us with our healthcare. He's very, very interested in preventing skin cancer. And, you know, as we get older, the risk for us getting skin cancer increases, and we are much closer to the sun. So that increases our chances of getting skin cancer. So he's developed a tattoo. He's going to tell you all about it. But basically, he tried it on himself, of course, you know, scientist that he is. He put it on his forearm, and it's invisible. And then if you're out too long in the damaging UV rays, it starts to come up and basically gives you a visual that says, get the heck out of the sun or reapply your sunscreen. So it's amazing what some of these tattoos can tell you. There are tattoos that monitor blood sugar for diabetes, high blood pressure for those who suffer from high blood pressure. And that's what I mean about smart tattoos. It's applying that kind of art form to healthcare. So he's our luncheon keynote. As I said, it'll be a fascinating presentation. And we'll have lots of other things to do. So be on the lookout for some more information about that. Questions about Vintage and Vibrant? When's it going to be? What time?
8 o'clock.
8 a.m. That's right. We do serve lunch.
All for $10? I'm in.
Yeah.
Eight until what time?
Till about 3:30. Between 3 and 3:30, we'll wind up. Okay, the Pace Center over in Parker. All right, something else I want to talk about that's happening tomorrow is the Colorado Center for Aging. That's a nonprofit, nonpartisan organization that speaks with a unified voice for all of Coloradans, particularly those 60 and older. Anybody 60 and older in here? Some that aren't. Yeah, I see you. I saw you snuck in. That's okay. This is a It's the Legislative Caucus on Aging tomorrow, starting, it's early, for you early birds, 8 to 9, down at the state capitol. But it's also via Zoom. So you can stay home, you can be having your breakfast and your tea or your coffee. 8 a.m., invited legislators will present their 2023 priority bills having a direct impact on older Coloradans. So this would be legislature that would impact you in some fashion. So if you'd like to do that, you can check their website for the link, and that you can also attend over the phone too, if you don't want to do it, via Zoom, or, have a laptop or a computer or something. So that's a very important meeting tomorrow morning, if you'd like to do that. And what's that?
Where do we get the link? for that?
At their website, and that's the Colorado Center for Aging. Excellent. Well, now I'm going to turn the program over to Tiffany to give you an education update. She's our education chair.
Good morning, everyone. It's nice to see more familiar faces and a few new faces. And for those of you who haven't attended these sessions before, I'm also with Douglas County Libraries. So I also like to give a little update on what's going on at the library that might be of interest to you. Of course, there are so many things that happen at the library at all of our branches. I'm only going to give you a little bit of a taste of a few things happening. On the back table, I included a flyer for our free legal clinic. And so we have volunteer attorneys who meet with people who have some legal questions. It might be landlord tenant law. It might be various civil cases. So not really intended for like high crimes. So if you are, in a high legal office, you need to, actually pay somebody a strong hourly rate for those high crimes, or even major crimes. So, but it's for, issues regarding civil law, and can give you some free legal advice from an official accredited attorney. So there's a flyer back there about how to schedule those. And I also want to remind you all that Douglas County Libraries at all of our branches does offer tech tutoring by appointment. You can check our calendar, you can check with me, and I'll show you how to navigate to make those appointments at whichever library is your is a branch that you could get to for that, if that's what you need right now. We also
Different from this.
that is exactly what that is. So there are also bookmarks back there to give you a little reminder of how to sign up for some of those tech tutoring appointments. Thanks for reminding me. I actually brought a visual aid on that. I know some of you attended last month and saw Bruce presenting from Ollie. So currently the Ollie courses are in, I think, Highlands Ranch for this session. Next month, we'll start having those courses at the Castle Rock Library. It'll be a different presenter. It won't be Bruce. And the topic of those is about aging And so definitely relevant to everybody who plans on aging or is aging. So it should be a very enjoyable topic, and I hope that you consider registering for that as well. And we also have, for those of you who like the Ollie sort of courses, we also have great decisions courses. And again, it's kind of like Ollie in that there are several classes that are kind of a series of several classes that go along with these great decisions. So these are going to be hosted in Parker, I think, starting next month. But I can help you navigate the website. I usually stick around for several minutes until rooms are cleaned up after these meetings. So that's the main thing I wanted to promote at the library to do for you all. Although I should mention, there's probably questions in everybody's mind who lives in Castle Rock about what's going on with the new building that just keeps getting bigger and looking more and more like it's getting ready. And I hope you're getting excited for it as well. So what, I don't have exact dates to share with you, but we are looking at a grand opening in early September for the new building. So this year. That also means that we will need to close the current building in early-ish May, the first half of May is when we can expect that the old building is going to be closed for demolition. That's the only way we'll have enough parking. So there will be a few months to, we'll encourage you to check out our other branches. Castle Pines is a very cute, small branch, but it's very cute. We will still have access to the materials through holds and things like that during this time. Of course, your Libby access is not going to change if you're using that for audiobooks or ebooks. And so just be aware there might be a little bit of discomfort during those months between middle of May and first half of May and our September opening. But we hope you're excited for it. We certainly are. And we're excited to show you the new library. I'm excited to start working in the new library and all that stuff. So, okay, that's enough about the library. Otherwise, I would just go on and on. So next month, as Gretchen mentioned, our meeting location will be one that we've never met in before. It's the Canvas Credit Union in Lone Tree. So we're excited about a new presentation from the
Try to do too much.
at Rocky Vista, I want to make sure I pronounce osteopathic medicine college. And so it's an introduction to what osteopathic medicine is. And I think they will be doing some demonstrations more than lecture and PowerPoint. So it should be an interesting, they're sending 3 doctors to do 3 separate demonstrations. And they have promised me they'll be able to fit that into the meeting. So it'll be a little bit of a different format for us, but I'm really looking forward to it. They are fun doctors. I've met them. They're hilarious. They're engaging, and I'm really looking forward to this. And even learning more about osteopathic medicine myself. So it is legitimate. It is covered by many insurances, things like that. So in case that was a concern in your mind. Okay. So that's April 6th at the Canvas Credit Union. On May 4th, you've already met our speaker. She is brilliant. She's funny. She's so passionate and so engaged. She will be, this will be Gretchen Lopez, who will be presenting to us in May. And she will be talking about recognizing and fighting ageism. And so we're looking forward to that. She will be, we will have that session at Douglas County Libraries in Parker, in one of our large event halls on the 2nd floor. We do have an elevator. Hopefully it will be working for those of you who attended the Parker Senior Fair a few months ago. Anyhow, and then on June 1st, we'll be back in this room so that we'll be able to record it. We'll be learning about the new Douglas County Health Department. So there's probably questions in a lot of people's minds about what does this new health department mean? What are these changes from when we were part of Tri-County, et cetera. So we'll be having Dr. Owen Steen and Laura Larson come to talk about the, oh, he's right here. Carolyn team.
So, and actually, my first name is Danny. On my card, it says D. Hohenstein, but I am a community health educator with the health department, and I'm also a senior. And so I'm here to represent the health department and also to learn something useful for myself.
I didn't recognize you with the hot
Yeah,
hat.
the hat. University of South Dakota Coyotes.
Excellent. So we're looking forward to that as well and learning more. And also they'll be presenting about their new fall initiative as well as the huge part of their plans for going forward, getting started. All right, that's without further ado, I would like to introduce you to our screen. You might remember Luke Thornton if you were joining us during the peak of the pandemic. But he's just hosting, but he is going to there's Luke. You might recognize him for those of you who were joining us before. And our presenter today is Artie Leal. He is Douglas County Housing Partnership and will tell you about opportunities for older adults in Douglas County regarding housing. Take it away, Artie. I hope you're feeling all right.
And I apologize to you guys that I couldn't be there in person. I really like doing these in person because it's just much more interactive. But the show must go on. I have pneumonia. I don't want to give it to any of you. Plus, I really honestly can't leave my house. So without further ado, I'll just jump right into the presentation. Just a little bit of background. The Douglas County Housing Partnership is the county's housing authority. We're also obviously the housing authority for all of the jurisdictions within Douglas County: Parker, Castle Rock, Lone Tree, Castle Pines, Larkspur. And we provide a variety of services to the community. One of those services is actual apartment communities that we develop, own, operate, or partner with private sector developers to build, to create affordable and attainable rental homes for folks who couldn't otherwise stay in the community. It's not just for workers, but for seniors. In fact, seniors is our largest demographic, and I'm not too far out from being one myself. So this is near and dear to my heart. The other thing we offer is a variety of housing counseling services. We can talk to folks and try to help them if they get into a foreclosure situation, or they're just simply delinquent on a mortgage debt, or even on the county taxes, and we can try to help you resolve that. And then we can also provide counseling on a loan product most of you probably have heard of, and many of you probably even know something about reverse mortgages. We're a HUD certified housing counseling agency, as well as public housing authority and a developer. So if you have any kinds of housing questions or needs, you can always call me. You can call our agency. You can check out our website. And if we don't have the answers or the resources, we probably know who does. The first thing I want to talk to you about today is that one section of our housing counseling that I mentioned, reverse mortgages. So what is a reverse mortgage? Because a lot of folks have a lot of misconceptions, and the misconceptions aren't necessarily untrue. But we'll get into some of that, and we'll talk about pros and cons. But I wanted to just give you guys a kind of a high level knowledge of this because, well, it doesn't matter how good of a planner you are. When you get into retirement, your income undoubtedly shrinks, and you're then relying on savings resources, Social Security, IRAs, annuities, pensions, which don't rival probably what you were making in the workforce. And you're trying to stretch every dollar you can because, well, we all seem to want to live a lot longer than our parents and our grandparents did. So you want that retirement to be healthy, and you want it to be vibrant, and you want it to be a long time. Reverse mortgage is a tool in the toolbox that you could consider, regardless your income level or even how effectively you plan for your retirement. In this current economy with inflation where it's at, I'm sure a lot of people are figuring out not just how to penny pinch, but how to plan ahead. So reverse mortgages are a way for homeowners ages 62 and over to access the equity they have in their home without selling it. And that's the trigger. You can always sell your home and take that cash and move on and do something with it. But if you want to stay in that home, if you want to age in place, how do you access that equity effectively and without putting at risk yourself by way of a foreclosure? Well, a reverse mortgage is one way to do that. It's a loan against the home. It's a mortgage, just like any other kind of mortgage. You have to pay it back at some point, but unlike a regular mortgage, it does not require monthly payment. So if your budget's getting tight, you could refinance your existing first mortgage into a reverse mortgage, eliminate your payment, and help free up some cash. You own the home throughout the entire process. The bank never owns the home, and that includes after you die. Now, a lot of people go, well, that's not true. And they're not wrong. It wasn't always true. When they created this product back in the 80s, the first probably 5, 6 years that it was in existence, when you died, the house turned over to the bank. That is not the case and has not been for over 30 years. It's just a regular mortgage like any other mortgage, so the payoff is the same. If you pass away, the house goes into your estate. Your heirs then have to settle your estate just as they would any other way. You have a mortgage on the house, they have to pay it off. If they want to keep the home, they can refinance it. They can pay it with cash if you have other assets, or they have other assets. If they don't want the home, they can sell it. And whatever's left after they make the payoff to the bank, they get to keep as their inheritance. Just as if you had a regular mortgage on it, that would be the same case. So no difference in that regard. It can help you access cash just based on the value of your home. So let's just say you're not having a cash flow problem. Maybe you even own the home outright. You've paid off your mortgage, but you're looking ahead and you go, well, I don't really want to go into assisted living. I'd like to age in place. Maybe I need a fund to help pay for at-home care. Or, there's some home repairs that need to get done. And because I'm not working, I can't apply for a home equity line of credit because those are based on income coming in. And I don't have enough to pay for one of those. Well, you could take out a reverse mortgage as a line of credit. A lot of our customers are coming in right at about age 60 or 62, just in their 60s. And they're seeing the huge value they have in their home right now. And they're just setting up a line of credit. And then that line of credit will stay until they sell the home or die. And that line of credit then can be accessed later. They don't access it now, they're going to use it possibly later. If they never use it, then the money's never owed. But it does create a safety net. And we're seeing about half of the people that we're looking at helping, that's what their goal is, to just set up an additional safety net based on the value of the house they have now. There's no income requirements. They don't evaluate you based on income like they would on a regular mortgage because there's no payments required on a monthly basis. They don't have any health requirements. This is not insurance. It's a loan. They do a little bit of a credit check because just like if you had paid off the home or if you have a mortgage, you have an escrow account, taxes and insurance on that property still have to get paid for. No different here. It's still a mortgage. They require you pay taxes and insurance. They do a credit check just to make sure that you are financially viable to handle taxes and insurance. And fortunately for us in Colorado, we don't have huge tax bills. I mean, it can feel ugly, but we don't live in New Jersey or Delaware, where it's literally 10 times as much. I mean, the average home in Douglas County is going to pay somewhere between $5,000 and $6,000 in property taxes. That's not the case in New Jersey. You're looking at more like 50,000. So most of our clients don't have any kind of issues with credit checks. The amount of the reverse mortgage benefit is determined by the age of the youngest borrower, the current appraised value of the home, and current interest rates. Now, interest rates are up. Ironically, reverse mortgages don't follow the same investor patterns that regular standard forward mortgages do. The companies that will typically invest in these, so like in a forward mortgage world, you got your FHA loans, Fannie Mae, Freddie Mac. Those are sort of the big investors. In this world, it's insurance companies. They find these to be a very good investment, and they usually are the behind the scenes investor that are working with your mortgage lender to provide them the money to give to you. And it's like Mutual of Omaha is like the biggest buyer of these. So interest rates have remained relatively low. They've gone up a little bit, but it's not terrible in this market. Appraised values obviously are at an all-time high. I'm sure some of you have heard there's rumors going around that tax bills are going to be really bad in 2024 based on the 2023 assessments. And I can tell you, I just took a look at it because they only do them every 2 years. The last time my home got assessed, obviously 2021, it came in just under 400,000, and I guarantee it's going to come in over 500,000 on this next round, which is effectively going to increase my taxes by at least $1,000 per year. If you're a senior and you own your home and you've lived in it for 10 years, the state has a program the county participates in. You apply to the county's treasurer's office and you can get a senior's discount. Again, it requires two things. You have to be over age 60 and you have to have lived in the home and owned it for 10 years. If those two things are true, you can basically get half off of your home, your property taxes. If anybody has any questions, call the Douglas County Treasurer's Office. And that doesn't matter what city or town you live in. Douglas County handles the property taxes, so call the Treasurer's Office to get the forms and start applying if you haven't done so already. Please interrupt me if you guys have questions. I mean, I can't see everybody in the room, so maybe Gretchen, you could just call people out if they got their hands raised. But I'm perfectly fine being interrupted if you have questions. Pros to doing a reverse mortgage. As I mentioned, no monthly payments, no income qualification, loan proceeds may be tax-free. Most of the time they are because it is a loan. But if you have more complicated finance, definitely check with your tax advisor about that. You can receive money in ways that suit your financial situation. So like I said, you can set up a line of credit. It can sit there and you can use it as needed over time. You can get a lump sum that pays off your existing first mortgage, maybe gives you some cash. You can get monthly payments. If you know that you just need an income boost, you want to borrow against that equity over time, but don't want to have to guess. You just want, I know I need an extra $500 a month. You can set it up to just automatically pay you $500 a month. Or you can, do combinations, a lump sum up front and then a monthly payment over time, a monthly payment over time with a little bit set aside as a line of credit to help pay property tax and insurance over time. It has zero effect on Social Security and Medicare. Those are entitlement programs, and they don't view your assets or debts as anything that would have any impact on Social Security and Medicare. If you are a Medicaid user, this could have an impact, depending on like if you took all the money up front and put it in a cash account, like a checking account, that could throw you off of Medicaid. So if you are on Medicaid, be careful if you did one of these. The loan is not due until all the borrowers are dead, or if the home sells, or everyone moves out. The everyone moves out is if everyone, both borrowers, or if you're a single borrower, if you need assisted living, there's no chance you're going back to the house. Then the loan's due and payable. You do have to live in the home. It has to be your primary residence. Most of the time, if you're going into assisted living in that scenario, you're going to probably have to sell the house anyway, especially if you're trying to do a private pay setup for assisted living. If you're 62 or older and you're married to someone who is younger than you, you can still get the loan. They'll base it off of you. Your spouse would not be considered a borrower, but they would add him or her to the documents, and then they would be guaranteed that if you passed away, the loan would not be due until they sold the home. So they could still stay in the home and retain the home ownership, even though they weren't a borrower at the time you took out the loan. And the biggest thing about reverses is they're FHA insured, 99% of them. Some banks do provide what they call a proprietary loan. It's not a federally regulated one, but 99% of reverses are going to go through FHA. FHA provides insurance on these that guarantees to the lender and to you, the borrower, that if you're upside down on the loan, if the loan, let's just say you made it to 100 years of age and you borrowed every red cent against the property and you owed more money than it was worth, your heirs or you would just sell the home for the value. The heirs or you would get to keep 5% of that sale. The rest would go back to the lender, and then the lender makes an insurance claim to get made whole on whatever else they were still owed. You're not on the hook for it. They call this a non-recourse loan. It's also important because in a standard forward mortgage, if that happened to you, you had a mortgage and you were upside down the day you died, your heirs would have to find a way to pay that off, including if you had other assets, if you had leftover IRA or 401k funds or CD or bank account. They'd have to liquidate your other assets to pay off that mortgage, or the estate would be sued. In this case, there's an insurance policy that says to the lender, you cannot sue borrower or their heirs or the estate for any lost value. You file an insurance claim, and that's how it works. So non-recourse loan, that means all the other assets you have in your estate will belong to your heirs, and they don't have to worry about this one being a negative asset. There are some risks with any financial product. There's always a negative. No product is perfect. It's not a one size fits all. And roughly a third of the people that we counsel will decide that this is not the right way to go, and they don't get one. And honestly, we don't care. We're here to inform. We're not here to sell. We're not a lender. We, in fact, barely talk to the lenders. The only time we ever talk to the lenders is when our clients tell us, hey, can you send them over my paperwork? That's about it. We don't get paid based on whether or not somebody takes out a loan. So we're here to inform. Here's the negatives. As I mentioned, you could risk all your future equity. It is possible because it's charging interest against you. I always describe this to people when I'm counseling. Think of it like a bar tab. You just took out a bill, and instead of drinks, they're charging you interest. And at the end of the day, when you want to sell or when you die, you got to pay that tab off. Well, sometimes that tab is worth more than a house. If you were planning on leaving at least some equity in your home for the kids, this is going to be risking that. Not always, but it could. If you were planning ahead to say, okay, I'm going to live here till I'm like 90, but then we'll have to downsize or assisted living, and then I'll use my equity at that time. You may not have enough equity left at age 90. When you take out one of these, they're only going to let you take out about 50% of the value. That's the other kind of con. If you are a homeowner and you have a mortgage, but you only have like 20 or 30% equity, this isn't going to work for you. They won't let you borrow enough money to pay off that existing first mortgage. But if you've been in your home for a number of years, you didn't refinance, you paid that debt down, and you owe less than half of the value of the house, but you want to get out of that mortgage, then this might work for you. So pros, cons. It could have a negative impact on Social Security benefits, such as if you receive SSI, SSDI, Medicaid, some veterans benefits, and widower benefits. Anything, if you're receiving any kind of government program funding that says you can't have a certain level of cash assets, this could have a negative effect that you take it out in the wrong way. So that's a risk as well. Common uses for the proceeds: paying for daily expenses. Like I said, you can get a monthly check if you know that you don't have enough income in to meet your monthly bills. Making home repairs and improvements. covering medical expenses. Just, you had to have cataract surgery and didn't have the right Medicare coverage that year, because that happened to my mother. I remember this very clearly. She picked the wrong plan. They didn't cover it, so she had to. This could take care of that if you didn't have the savings for that. Purchasing long-term care insurance, although, you can do that in this market in these days. I don't know that that's an effective use. If you don't already have a long-term care insurance plan, it's probably not worth buying one now. Establishing trusts, paying for lawyers for estate planning and so forth, helping to financially support other family members. If you're one of those generous, grandparents who want to help out your grandkid go to college or buy their first home, and you're willing to risk your equity, you could do it that way. I've seen that done several times. It's a way to leverage one property for another. Use it to pay off other old debts. You've run up the credit cards, you can't afford the payments because interest rates in this current market doubled. Pay them off using this. Yeah, you'll be borrowing against the house, but at a way lower interest rate with no monthly payments attached. So it's an effective way to consolidate debt. Maintaining or improving your quality of life. And then some people do go nuts and they go to Vegas and they take a trip around the world and they blow all their money because that's what they do. I don't tell people what to do with their money. And the lenders don't care and FHA doesn't care. Obviously we recommend you don't do that, but it's a free country. You can do whatever you want with this money. Like I said, our goal here, and goes for any of our housing counseling, foreclosure prevention, home purchase, we're here to inform. You got to make the decisions. We're going to try to give you all the best information and give you a way to evaluate things so that you can compare apples to apples and see, is this the right tool for me? Should I be thinking of something else? Our goal is also to try to get you to think of something else. When you go through a session with us, we don't just hammer home what the reverse mortgage does. We try to talk to you about your personalized situation, your personal budget, your personal goals, because everybody's got different plans. Everybody's got a different mission in life. And so we don't discriminate or have any kind of prejudice towards one thing or another. We just want to help people live out their lives the best way that they want to. So this is just one of the ways that we can help. Here's a couple of additional resources, and I think the staff there at the county can get this out to people if you want this presentation afterwards. But reversemortgage.org is the National Reverse Mortgage Lenders Association. And then National Council on Aging, NCOA. They're a nonprofit and they're nonpartisan, and they're also not a lender. That's probably a great one to get. Just some additional resources. Now, I do want to tell you, you cannot get a quote on any of these loans without actually talking to a lender and starting the steps. You can't technically apply for one of these loans until you've actually seen a HUD housing counselor, like our firm, or, there's about 25 firms in the state of Colorado. So you don't have to specifically come to us. You can pick and choose. And those are listed on HUD's website. I think they're also listed on the reversemortgage.org website and the NCOA.org website. So if you see like reverse mortgage calculator, you will find out there's no such thing. These things are so heavily regulated. They don't want consumers getting tricked into signing off on a product that's not real. Because like I said, it's not as easy as a forward mortgage. It's based on your age, the value of your home, and the interest rate. And it is a crazy calculus formula that they plug those numbers into to come up with the number of what you can borrow. And so it's not like, oh, it's 80% of the value of your house. I tell you, it's about 50% because it's about 50%. But each individual's got their own individual formula. So you'll need to speak directly to a lender, which can be very annoying if you're just trying to do some research. I would recommend that you come see a housing counselor, because we can do an estimate We're not a lender, so it's not a quote, but we can give you a ballpark of what the lenders are going to quote you. So if you're looking for that level of information, and generally we don't charge for our services. There's a $125 fee for those at the highest income levels because HUD won't pay us for those. So we have to charge a fee, but we don't charge it up front. You don't have to give me a credit card or cash. We just tack it on to your closing costs if you actually do this. So it's a benefit to us. If you don't do it, I'm not going to cry that I didn't get paid. It's okay. We don't mind giving away free counseling, but so you can get more or less free counseling at any income level from us. So don't hesitate to come talk to us. Again, we're not going to sell you on anything, and I don't have any interest in whether or not you do one of these. It is good to get the information though, if you're even thinking about it. So that's one tool in the toolbox to help, especially in these inflationary times, hold on to housing and age in place. But as I mentioned, this is not the tool for everyone. And if you owe too much money on the home, you won't qualify for this. Even if you've been a responsible borrower, even if you have 20% equity in your home, that's not enough to make that product work. Maybe you do need to downsize. Maybe downsizing also means, especially in this market, that you're going to have to rent for either a period of time or maybe till the end. There are options, and they are very affordable. And even if you were a high income earner before, or you sold a home or could sell a home and have a significant amount of assets, we don't hold that against you. Affordable housing is based on your income, your actual month-to-month income. If you have large assets, they factor it in, usually 2 to 5% of the value of the asset per year gets added. So if you had, let's say, $250,000 in the bank from a home sale or other investment, we would only look at that as an additional 2% of that 250,000. So you're talking, can't do the math in my head, an additional $5,000 a year. So it's not the end of the world. If you have assets, it's not the end of the road. You won't get necessarily turned down. So you might consider an affordable rental home. We develop and partner with private sector developers to develop affordable rental apartment complexes. And a number of them are dedicated specifically to seniors age 55 and over. I'm going to just kind of give you a nice overview of what's out there in the county. When I gave this presentation about 5 years ago, there was about half as much. We have done a lot to develop new, and this list is going to double over the next 5 years for everything that we've got in the hopper. Lincoln Point, near Lone Tree, sort of Meridian area. Lincoln Point Lofts, it's right next door to Hacienda, Colorado there. Copper Step Apartments on the south side of Lincoln. And then some properties owned by the Shea Corporation that we partnered with. Apex Meridian West, Apex Meridian East, and the brand new, just opened last month, Apex Meridian South. Now none of those are restricted for seniors only, but we have a number of seniors that live there. If you don't mind living with other families, then this is an option that would get you a much cheaper rent. In a couple of slides, I'll show you what financially that looks like. Meridian Senior, though, Shea is a company that does care about its seniors. In that Meridian complex, they're going to build Meridian Senior. We just entered into a partnership with them on that one last month. So you'll probably see that one pop up in the next 18 months, 170 brand new units. And I'm going to show you some pictures of what these things look like too, because affordable housing today is not the affordable housing of 20, 30 years ago, or even, it's not public housing. It's very different. You'll see the acronym I have, LIHTC, 4%, 9%. What does that mean? Low income housing tax credits. This is what makes affordable housing different. In the 1930s, 40s, 50s, and 60s, the federal government paid for housing to be affordable, paid for it to be developed, and then paid ongoing subsidies to the properties to try to keep them up. And for a couple decades, they did a really good job. Fortunately, federal priorities shifted, the budget shifted, not enough money was being poured into these communities. Plus, you created giant pockets of concentrated poverty in areas where you needed good working environments. So they didn't spread them around. They put like 10 of them in a 2-block area. By doing that, the properties became dilapidated. And when they become dilapidated, the next thing that happens is people stop caring. And when people stop caring, then you start encouraging crime. And so a stigma comes over these properties. That stigma still carries today. I go and propose one of these projects near somebody's neighborhood, and they think I'm about to put up, a giant public housing tenement a la New York City. No, these don't look like that. These look like market rate apartments, and most of them are being built by market rate Fortune 500 developers that we partner with to get them done. These are excellent apartments. They just have cheaper rents. And how we achieve that is through the low income housing tax credit program. The IRS offers these tax credits out to developers every year. It's an incentive to create a public private partnership so that the private sector is actually building this. Because if they didn't have that incentive, it's almost impossible to do it. I was a private sector developer for 20 years. I can tell you without any kind of government subsidy or any kind of government incentive, it's not affordable. That's why, you look at Riverwalk, which is gorgeous, but it was done without government incentive. And the rents are like $2,000 to $3,000 a month, depending on the size of the unit. That's expensive. I mean, it's gorgeous, don't get me wrong, but it's expensive. But it's not expensive because they're gouging their tenants. It's expensive because it was expensive to build, and they had no way to cut those costs so that they could really offer lower rents. With these properties, by using the tax credit program, we get tax credits as a developer that we sell to the private sector. Mostly banks and insurance companies want to buy them, but we've had other private sector investors like Microsoft and Amazon buy them because it gives them a tax credit that can take off their corporate taxes. We complain that corporations don't pay enough taxes. Well, yeah, they probably should pay more, but some of the reasons that they don't pay is because they go and buy low-income housing tax credits or other types of tax credits to reduce their tax liability. And if that's how they're getting down to zero, well, then they actually are investing in other areas of our economy. So it makes that whole tax question really complicated because that's how we do things in America. We like to make them complicated. But this complication gives us a private sector benefit. And I'm going to show you what those are. Highlands Ranch, there is a beautiful award-winning senior complex that Shea opened called the Audrey, and it's located right in town center at Highlands Ranch, 133 senior units. Shea is vying to get a lot very near there that will allow them to build another 160 units and create a twin property called Highlands Ranch Senior. That one will probably be going up in 2024. In between, off of County Line Road, is Traditions. And that one's a bit older. It has 96 units of affordable housing. It's a family property. Talus at Ridgegate is a new community that went up right on the platform at Ridgegate on the east side of I-25, right at the light rail stop. That has 67 units of affordable housing. That one was built by Coble and Company, another large for-profit developer. Coble also is partnering with us to build Ridgegate Senior. This will be 101 units of senior affordable housing. Castle Rock is no stranger to affordable housing. We have a number of projects there. We own outright the Oakwood Senior Apartments, originally built in 1982. They were built using USDA loans because Castle Rock had a whopping 500 people in it at one point. It was very rural. In 1982, it only had a population of 5,000, still considered rural. So a developer built 64 rent restricted apartments. In 2006, after our agency was established, we acquired the property. And just 3 years ago, we endeavored to add more to the property. So, it was built with rural money, so it had sprawling lawns and a parking lot that was 4 times the size of what we needed. So we took out some of the lawns and the parking lot and put a 53-unit brand new gorgeous building on it. That is also for seniors. And then the Pines of Castle Rock over by the mall. The Reserve at Castle Highlands, just off of Wolfsenberger, 200 units there. The Castle Creek Commons East, this is an older project off of Gilbert. It is heavily subsidized with what they call project-based Section 8. So if you are struggling and you are like an SSI income level because of your disability, this is a place where you can find a subsidized unit where you would pay 1/3 of your income and then as rent, and then the rest of the rent does receive subsidy. So this is sort of old school, but it's not public housing. A little bit different, a little nicer than public housing. Auburn Ridge, fairly new senior complex. We built that in partnership with Atlantic Development back in 2014. Castle Rock 1 and 2, also down on Gilbert, have an old, again, USDA was built up when Castle Rock was rural. Has 80 units there that are subsidized by the USDA. Ren Rock Senior Apartments down on 4th and Perry has 33 units of project-based Section 8, and currently it has a private owner. However, we are under contract to acquire this property, and we fully well intend to make it as vibrant and beautiful as Oakwood is now. And then we just partnered with another developer to build the Meadow Mark, which is going to be sandwiched in between the Promenade and Castleview High School. And that one will be done probably end of next year, 220 units for seniors. Parker has a couple of projects. Parker Hilltop, which has been there for about 20 years. South Range Crossings, which just completed and is leased up. It's 204 units. Those are both family style. And coming soon, the South Pinery, which is going to be another 200 units of family style. So that's all of the affordable housing in Douglas County that's built right now and that I can actually tell you is for sure happening. Here's what it looks like. So this is Apex Meridian East, which was built in 2020 by Shea. There's Copper Step, which is on the south side in the south part of Meridian, partnered in on. Here's Auburn Ridge right there in Castle Rock down off of Wolfsenberger. Here's Apex Meridian West, which was built in 2014 in partnership with Shea. This is the Audrey in Highlands Ranch, also built by Shea, an award-winning project of theirs. And this is Oakwood Senior 2, and I thought I'd give you one interior shot. This one I'm very proud of because I developed it. Housing Authority owns it outright. This interior shot, that's pretty much what you're going to find at all the other properties in terms of the quality of the interiors. So again, these are not built to look shabby. These are built to compete with the market rate. Here's what the rents look like. So market rate rent in Douglas County on a 1-bedroom right now is about $1,836. If you were to qualify for affordable housing, it's going to be $1,319. That's an annual savings of $6,200 a year. On a 2-bedroom, market rate rent right now is averaging $2,050. And the 60% LIHTC rent there is going to cost $1,582. So again, savings close to $6,000 a year. Here's what the AMIs look like. Area median income. So if you are a single person and you make close to $50,000 in income, again, we're not talking about your assets, just income, you're going to qualify. and you're going to qualify at these rent rates: 1 bedroom, 1319, 2 bedroom, 1582, 3 bedroom, 1828, if you really want that one that big. If you're a two-person household, you can make up to 63.3 and still qualify at those 60% rents. Some of these properties have 50% rents. Not all the units, but they'll have a good handful of them will have 50% rents. About a quarter of Oakwood is at 50%. Copper Step has, I think, 10 units at 50. Auburn Ridge has 10 units at 50. If you qualify there, the rents go down to 1099, 1318, 1532, and 50% is still about 40 grand a year. So we're not talking about people who are living in poverty, but this is what people can afford. And so we make it affordable. Because if you're only making 40 grand a year, it's going to be almost impossible for you to afford $2,000 a month of rent. That's more than half your income going out just to rent. If you're in the lower echelons, you get some disability, you're getting SSI, SSDI, 40%, 30% units, you can see the rents get much, much lower for those lower stratified incomes. And we cater to them all. Now, I saw a question come in online, what does the occupancy look like for these? Well, for the senior complexes, I can say there's big wait lists on all of them, which is why we're building many more. You saw on my list, there's 3 going to be under construction here within months. We have 3 more that I didn't tell you about planned right behind them. We know there's demand and we're trying to meet it. It's expensive, it's difficult, it takes time, but we're trying to catch up quick. In terms of family properties, there's a number of family properties that are slated for development as well, and some that I didn't tell you about 4 more than that. If all goes well, we're going to build like 1,000 units of affordable housing over the next 5 years, which won't completely give away housing to everybody on the wait list, but it'll put a big dent in it. So Oakwood, just as an example, Oakwood has a wait list of about 200. Apex Meridian has a wait list of about 600. But Apex Meridian also has about 500 units between the 3 projects. I highly recommend anybody that is thinking that this might be needed in the coming years, or maybe it's not for you, maybe it's for a friend, relative, maybe one of the younger people in the room is thinking, I want mom and dad to live close to me. Get their names on these wait lists, because the way the wait lists work is a unit comes available, we start calling down the wait list. Some people will say, no, I've already found other accommodations, I moved out of state, no longer interested. And so, yeah, it might be a 200-person wait list, but we get, a unit available. It might take 25 phone calls before we get a taker. So get the name on the wait list, because you can get a unit a lot faster. There are 2 properties on these lists that do not use wait lists. It's first come, first serve. Lincoln Point Lofts in the Meridian area and Copper Step on the south side of Lincoln. It's important to know that, because basically then you can kind of luck of the draw. If you're in a hurry to get something quick, you can start calling those 2 properties every other week to find out if anybody has turned in their notice and get your name in and get a unit. And when we've had emergency situations, I can tell you there's enough turnover at both properties that we've been able to house some people rather quickly with those 2 properties. All the other ones do use wait lists, and so you're going to have to get on those wait lists. But there's no charge for getting on a wait list. You just call the property and you add your name. And when the unit comes up, that's when they start going through like the application process and the qualification, et cetera.
Artie, we have a question.
Please.
Did you have a question?
Oh, no, I was just for you guys because he wasn't responding, so that's why I did that.
Oh, okay.
And now he responded.
All right, you answered the question. Thank you.
I have one though.
Wait, never mind. Kelsey has one.
You said Lincoln Point Loft doesn't use a wait list. What was the other community?
Copper Step.
Thank you.
You're welcome. Just to give you a note, Lincoln Point Lofts is 2 buildings. They're 100% elevated. So if you have a disability, Lincoln Point is much more preferable. because it's 100% accessible. Copper Step, on the other hand, only the first floor units and not all of them are accessible. It was kind of built hilly. It's a 3-story walk up, so mostly stairs. So if you're disabled, Copper Step has a few units, big wait lists on those, but Lincoln Point, you can get in rather quickly because they have 100% accessible. Oakwood is 100% accessible. The new building is, and the older buildings are accessible on all of the first floor units. So roughly 3/4 of Oakwood is accessible if you're struggling with a wheelchair or walker. And then all of the other senior complexes that I've mentioned, all of them are elevated and 100% accessible. So that's Renrock, that's the Audrey, all the new development, Meadowmark is going to be 100% accessible. So that's obviously something to consider as well, if you know that your legs are going to give out one day. Any other questions? Well, here's some basic contact info at the Housing Authority. If you want to talk to somebody about reverse mortgages, I'm licensed in it, but so is my programs manager, Mary Wilkes. Give her a call. That's her phone number right there.
Artie, we have a question.
Oh, more questions, please.
Yeah, Artie, Bob Epstein. I have a question on reverse mortgages. What has happened if the reverse mortgages, if you have a natural disaster like the fires out in Boulder?
That's a great question. So reverses, not dissimilar to standard mortgages. So the big thing with those fires is that they didn't have what they call guaranteed insurability riders on those policies. And so they had established a value on the home, and it was roughly half as much as it was going to cost to build them back again. The mortgage companies also were not always friendly, depends on the company. I know that when it comes to insurance claims on reverse mortgages, you're not dealing with the Fed, you're dealing with the individual lender. Some of these lenders are great. Some of them can be a pain. The biggest question, though, is it's not about the lender, it's about your insurance. So I'm glad you brought it up. You should check with your insurance provider to make sure you have what's called a guaranteed insurability endorsement. And then that way, if there is an inflationary cost, they'll cover it. That's included in the endorsement. And I don't believe those endorsements are very expensive. Any other questions?
I do. I'll take another one. Artie, can you talk a little bit about the facility that's being built off of I-25 with the assisted living through the housing partnership, that piece?
That's Bridgewater, Castle Rock.
Bridgewater, Castle Rock. Yeah, I can touch on that. It didn't end up on the list because that one's a more complicated project. We're trying to get to the finish line. But Bridgewater is going to be the first of its kind. It's what we're calling affordable assisted living. We provided to the developer, Solterra, private activity bonds. Bonds are, like any government, it's a vehicle for creating debt. Why bonds are popular is you get an investor that buys the bonds, and the lender that's going to get the money, the money's tax exempt. So your interest rate is significantly lower than if you got a standard conventional mortgage. When you talk about a big project like that, lower interest rates, big deal. So we did that. They got some tax credits to go with it. And there's 79 assisted living units that will be affordable. And how that will be paid for. All right, let's just say that you meet the income qualifications at 60% AMI or less. You will pay 60% AMI rent to live there, and then the medical care will be paid for by Medicare or Medicaid. So it eliminates the private payer situation, and you will basically pay these rents. I'll go back to that So you would pay $13.19 for an assisted living unit. It's slated to be completed in construction this year. It is a little off pace. We're trying to get it caught up. We had, weather was a factor in it for sure. And, it's just been slow to get out the gate because of the financing as well. They're very complicated. It's a full, what they call continuum of care facility. So the affordable piece is the assisted living, but it will also have independent living, which is not going to be subsidized. We didn't subsidize the independent living on that one. We couldn't afford to. We had to pick and choose. We picked the assisted. So the independent care is going to be more market rate. I don't think they're going to charge like $2,000 a month, but it'll be more expensive than the rents I'm showing here for the affordable. And then it will also have memory care. The whole facility should be done in October, could be sooner. Construction is catching up on their timeline, so here's hoping. If you're interested in Bridgewater, Castle Rock, you've got to go to a specific website, which I will give Luke and the staff in Douglas County to get your name on the interest list.
Yeah, and we've reached out to Bridgewater, and I've been in contact with the regional marketing director. So we will probably have more information available also through us. So we're going to
Excellent.
and make sure you all know about it. We had a question over here. Yes.
Hi, Artie. Will Medicare and Medicaid also cover non-medical home care or just medical home health care?
In the case of Bridgewater,
Yes.
yeah, it'll just cover the medical care at Bridgewater. But just the medical side of it, not the housing.
Thank you.
There are also, in addition to the projects that Artie was talking about that they partnership with, there are some other private enterprises that are building assisted living and memory care. Artie, do you know anything about Terra Bluffs?
I don't track anything that's not technically affordable.
Okay.
And so I haven't heard of that one yet. I know that there's a lot of private pay stuff going up throughout the county.
Right.
And that's also very needed. I mean, we have a wide variety of income levels. So, we don't need to overbuild on the affordable, but I don't track that other stuff.
Gotcha. I reached out to Jason Broberg, who's the marketing director for Terra Bluffs. I met with him the other day, and they're under construction right now. They should be completed, he's hoping, depending on weather, sometime this summer. And we'll get information to you. I know he's planning a breakfast for the public on April 18th. Just get information to you about that if you, at that point, want to go out there and kind of check them out. But they're assisted living and memory care.
Where?
In Parker, South Chambers Road. But we'll get more information to you on that. Any other questions for Artie? Yes.
I saw another one coming online. Can two non-related people live in a 2-bedroom unit? And the answer is yes. The answer is yes. So you and a roommate, you can have a roommate situation, and then it's family or senior, doesn't matter. You're just but the household income of the two people can't exceed the 60% AMI. So that would be 56,280. Am I hearing another question out there?
I think we're good, Artie.
Okie dokie. Well, I appreciate your time today. And again, feel free to contact any of us at the Housing Authority if you have questions related to any of the materials that I presented today, or just go to our website, douglascountyhousingpartnership.org.
Thank you, Artie.
Thank you so much.
Thank you.
Get well, Artie.
Working on it.
To Allison, or Kim. Abby will put it on our webpage so you can access. That was a lot of information he gave us, some fabulous information. And I know some of you were writing furiously And I was too, but I didn't get everything. So that PowerPoint will be available to you eventually on our webpage. Thank you so much, Artie. I want to ask a quick question. How many people in the room know of somebody that has taken advantage of a reverse mortgage? Raise your hand. There's a lot of misconceptions about that financial option, and that's why we had a pro come in and talk to you about that. It could sway you one way or the other, but you got the straight deal from Artie, so. And as he mentions, it's a tool for some people, not a good fit for others, so that's your choice, Also wanted to ask, as far as these new projects going up, I know some of us grumble about the new building that we're seeing, but I think it's encouraging to know that some of these projects are for older adults in our county. I know one of the top concerns that people over 60 in Douglas County have is housing. The other big one is transportation. So it's good that we're addressing this kind of need that we have. I know I'm in a single home right now. My plan is to be there till the end, but who knows, right? We just don't know. And there's some more assisted living and memory care units going up as well.
Yes.
Which, that's not Artie's area, but to let you know, a lot of that building that's creating, I know, additional traffic and situations really will benefit people in the end. So I guess we just need to learn to be patient or move to Wyoming, right? Thank you so much for coming today. We hope to see you next month. We talk about osteopathic medicine. And I'm interested in seeing those demonstrations. Think about if you want to volunteer your body to science while you're still living. And if you have any questions, we'll hang around for a little bit and you're more than welcome to approach us and talk. Don't forget to sign in and pick up some literature on your way out. Thank you so much.